I think it's such a silly bet, like 25 or 50, it doesn't make a difference. I think that's the problem with the news cycle and all of this. They're losing sense of the bigger picture. Okay, Fed policy. What does the Fed have to do? Fed has to keep interest rates high enough to satisfy the creditors, that they're going to get a real return without having them so high that the debtors have a problem. So now if we're looking at this, whether it's 25 or 50 basis points, 25 basis points is going to be would be the right thing to do if you look at the whole picture as a whole. If you look at the mortgage situation, which is worse and that affects more people, then it's probably 50 basis points. But let's get beyond that, okay, and talk about these five big forces. The first of those forces is the force that you're referring to, which is excuse me, the debt, money, economy, dynamic, and force. Okay, so we have a big debt increase, we have an enormous amount of debt, and it's going to keep increasing, and one man's debts are another man's liabilities. Okay, so what is that going to mean for monetary policy? Okay, as you have to sell more and more of those bonds, what will be done? I think the same thing was done in Japan. Though that what happens is there's not going to be a default. Of course there won't be a default. But increasingly they have to drive down real interest rates so that real interest rates are significantly negative. So you're going to have in order to service the debt, you have to have a significantly negative real rate, and you also have to have then the depreciation of the value of money because inflation rises, so that you have to have a nominal growth rate, in other words, inflation plus real growth, that is above the nominal interest rate, and you have to have a real interest rate that is negative, and you have to have a positive slope yield curve so that holding bonds is a bad deal. We hope for an orderly transition of power. Isn't it quite amazing that we would think, could we not have that? And then we go beyond that, and then we say, what about those policies that are going to be dealt with? Nobody's going to deal with the debt policy. That's going to end up being monetized down the path. Then the question is issues of taxation, and those issues of taxation will have an important impact on the capital markets. If they're bought for after-tax returns, by and large. It's the important thing. You lower corporate income taxes, you raise corporate income taxes, it makes a difference to prices. So we're going to have those issues, a lot of issues to talk about regarding the election. I think when we go beyond that, most likely, there is going to be irreconcilable differences, and I think that you're going to see more movement to states. So there'll be a challenge of what does the central government control, and what do the state governments control, and is there an obedience in a sense. So we are coming more to a fragmented set of circumstances. What we would need, I think, is strong leadership of the middle to bring the country together and isolate more of the extremists, if that was possible, and then to make reforms, because we do have a very skewed type of economy.